Aditi Nayar, Chief Economist and Head of Research and Outreach at ICRA, with us on the show. Aditi, good having you. Thanks for joining in. How do you juxtapose the two, Aditi? New GST rates, but coming with a bit of a lag maybe, and tariffs in play now. How does it impact economic growth in the interim period until clarity emerges, and then maybe even post that?
Thank you. So to start with, tomorrow we'll get the GDP data for Q1, and we are forecasting growth to come in at 6.7% for the GDP and a little lower than that for the GVA. This is possibly going to be one of the best quarterly prints for FY26. We had a quarter where both capex was front-loaded by the government of India and by the state governments. Revenue expenditure growth was also very high in this period for the center and the states, and especially compared to the previous quarter. And also we found that exports growth, if you look at the non-oil segment, growth was actually fairly decent at about 6%. And there was upfronting to some geographies before the tariff impact really kicked in. So broadly now 6.7% is where we're kicking off Q1. That's our estimate. And after that, we have these two different drivers which are coming in. One is the tariffs, as you mentioned, and the second is the potential rationalization of GST. So on the tariff side, of course, we expect the impact to be negative both for exports and for sentiment and for private capex. So we are envisioning a delay in private capex because of the uncertainty related to the tariffs that we've seen underway since the last several months. On the GST side, it's more of a mixed bag. Our sense is that discretionary purchases are likely to be deferred in the second half of Q2 until the actual rationalization happens, which is, the target seems to be Diwali, which may turn out to be a little challenging. Let's see if all the states can come on board by then. But at least in the second half of Q2, we would expect discretionary purchases to get a little delayed. However, after the GST rationalization happens, we'll see the positive impact coming in. So a little bit of a volatile trend as far as the growth numbers are concerned from the GST side.
Right. Aditi, good afternoon. Hiral on this side. Happy to speak to you after a really long time. You've given out what you're looking at in terms of the first quarter for your estimates. If you have to look at FY26 as a whole and incorporate all the events that are happening from the US tariff aspect, you have GST, which could probably coming in as a benefit as well. Would you look at rejigging your estimates for the entire year as a whole? Or even if you've not worked out the numbers yet, what is the potential, whether it be an upside or a downside?
So Hiral, really nice to talk to you after a long time. We started this year thinking that FY26 GDP growth would be around 6.5%. And in two tranches after that, we brought it down to 6%. So that's where we are right now. 6%, obviously, upside will be if the penalty gets knocked off or if the tariffs themselves are brought down after negotiations and a very quick GST rationalization. Downsides will be if the tariffs stay and the penalty stays, and the GST sort of rationalization takes longer than expected, but demand gets stalled in the meantime.
Okay. And apart from that, if you have to look at the RBI side of it as well, if I'm not mistaken, the next meeting will be in the last week of September, which is pretty much close to the GST rollout that is expected to happen by the 22nd of September. And that is a story that one of our reporters got for us as well, that the sources are indicating that 22nd September, that's the first day of Navratri, is when the potential GST rollouts will happen. Now, if that is the situation and you're looking at RBI policy in the last week of September, do you think there could be a potential of a rate cut also that could come in? Because the RBI governor at a FICCI meeting did mention that they will be on board to do as much as they can when it comes from the export side of the business as well. How do you expect them to, probably take a shift?
My sense is we're not going to get a rate cut. We may get some sector-specific support coming in from both the fiscal policy side and the monetary policy side.
Okay. And in what form do you expect that to be?
see some sort of, on the fiscal side, some sort of package for exporters. So if I again go back to kind of a August 1 scenario, the baseline that we would have had was 50,000 crore of leeway with the government of India to either absorb lower taxes on the direct or the indirect tax side, or increase either capex or give some sort of support to exporters. So now how this, sort of buffer gets used is something that we need to wait and see. Definitely some kind of package for exporters could be, considered if there is really no headway in negotiations in the next month or so.
Aditi, we'll leave it at that. Thank you so much for taking the time out and giving us this quick perspective. Really appreciate your time.